I went to talk to Zopa's chief executive, Giles Andrews, but first to Anna Ciro, who lends the cash she was left in a will.
Well, about a year ago, I received a reasonable amount of money, and while I used some of it, obviously, to pay off the bills, I had some money left. And my bank wasn't servicing me in a way that met my needs that I was terribly happy with. And then through word of mouth, I heard about Zopa. And it seemed a good idea to me. I had some money that I didn't necessarily need in the short term, which could be loaned out to people who would be able to use it at a rate that they wouldn't necessarily get at the bank and that would help them.
Well, first of all, what's the cause to which you've given money, lent money rather?
I've lent money to people who wanted to buy a camper van so they can travel around Europe with their family, or for people who've had unexpected bills because of water flooding through their roof. Anything and everything, really. It's quite diverse. A couple of times a week, I usually go into what's called the listings market. That's where people, if you like, can put their appeal directly to me, and they say what they want to do with their money, and they give some advice on the kind of interest rate that they're looking at and the term that they're going to pay it back. I suppose it's kind of like an auction. People who are prepared to lend money will put in how much they want to lend and at what interest rate they're prepared to lend at. And if people undercut you, then you get pushed further down the line.
So I want to write a book and it's going to cost me $5,000. I put that listing up saying, good cause, it's going to be a great book, but I do need $5,000. And you look at that and how does it work?
I look at that, decide if that kind of thing appeals to me. I'll also be looking at whether that person's put in financial details. And if I feel that person is a reasonable, secure kind of bet, I might put in £20.
So what's your role?
The role of the company as a whole is to provide a marketplace, to manage a marketplace, and to connect lenders and borrowers directly without them having to deal through a bank, and therefore offer both sides a better deal.
So if I want to write a book and it's going to cost me $5,000, I come to you and say that, and you assess me, see if I'm a fraud, whatever that kind of thing.
We assess you rather than the project. So in the example of you coming to us to borrow £5,000, we would initially assess you and your risk profile. So we'd pull a credit file on you and we'd put you into one of 5 different credit markets: A star, A, B, C, Y and no. No being we're not prepared to lend you. And each of those markets then has a bad debt expectation, which might range from 0.5% a year in our safest A star market up to perhaps 5 or 6% a year. And the lenders simply then choose which or all of those categories they want to lend to, and they build in their expectation for bad debt, informed by us. I mean, they can say, actually, historically, Zopa's been rather conservative. We think that bad debts won't be as high as that. Or they might say, we think that the world's economic environment's not looking very favourable. We think Zopa are optimistic. They make their own decision.
What do people come here and say, lend us some money for this?
Well, the most popular reason to borrow money is to buy a car, with home improvement and debt consolidation coming behind that. So we're less interested in the actual purpose of the loan. We're interested in our assessment of the individual's ability to repay it.
I still don't understand how your lenders get a better return than they would sticking it in the bank, and your borrowers get it cheaper than if they borrowed from a bank. How does that marry?
Well, if you think about it and compare it to the bank spread, so the bank spread is the gap between what banks pay their savers and what they charge their borrowers. And bank spreads today in the UK are about 9 or 10%, staggeringly high. So since the credit crisis, bank spreads have widened enormously. And that means that banks are paying savers very little money and charging borrowers rather a lot. If you could compare our fees with the bank spread, and our fees are nothing like 9 or 10%. So the difference between our fees and bank spreads are the benefits to both lenders and borrowers.
Giles Andrews, and before that, Anna Ciro.